Hi traders. For those who regularly watch our YouTube videos, you will know that we forecasted quite some time back that gaps on market open would appear more frequently and print the gap on the higher time frames, and not just the lower ones. This past week was an excellent case study in point. Up on the screen here is the H1 chart. Take a look at these gaps up on market open for 3 out of the 5 trading days this past week, all of which were filled on the same day as they appeared. On Wednesday, we posted our pre-FOMC forecast on our public Telegram channel. If you scroll through that channel's history and find the post in question, you will see that we listed 2 levels that we predicted the smart money would push price to off the FOMC event. Before we discuss how price action panned out after that event, it's important to understand that any FOMC event that includes the dot plot, such as the one this past Wednesday, significantly increases both the volatility and the uncertainty with regard to the direction of any trending move once the dust has settled. In fact, with any FOMC event, dot plot or no dot plot, standard support and resistance lines are not well respected. However, we here at GFX never sit on the fence and trade with the courage of our convictions, and hence we clearly stated 3,360 and 3,342 as reaction levels. Let's take a look at what happened. On Wednesday, we saw price retreat lower off the FOMC proceedings. Now, what we typically see after an FOMC event is manipulation that extends across the following trading day, but on Thursday, the Americans were on holiday. So you can see that price initially rejected off the wick when it first hit our 3,360 level and then subsequently broke below it. However, this bear candle here closed well above its low, and hence we saw a push back up. When American traders returned on Friday, the delayed manipulation took full effect, and price bounced off our 3,342 level a few times before sufficient accumulation, and then went up like a rocket with this extremely widespread bull candle. On Friday, we had no red flag US data on the economic calendar and no shock new development of note on the Israel-Iran conflict. In other words, this candle here was pure manipulation, as we forecasted, and launched from our 3,342 level. Now, what's in store for the price of gold this coming week? As you will all know by now, regardless of the time zone you're in, the US has directly attacked Iran's nuclear facilities. Yes, I know that Trump said that he would take 2 weeks before making a decision, but what are you gonna do? What happens next with the price of oil, gold, and global financial markets across the board depends on whether or not the Strait of Hormuz is used by Iran for its first retaliatory measure. We will closely observe the XAU-USD spreads across various retail brokers over the next few days, as well as the action in the Strait of Hormuz. A final point to note is that if you think gold will automatically fly off and hit the 4K mark this week, then perhaps go through some of our recent YouTube videos before you plan your trades. If you enjoyed this video, please hit the like button and leave a comment. Until next time, please be extra cautious with your trading this week and reduce your typical position size. Take care.